What's up, investors? Welcome to Money Talk, the number one news source and the one information source for everything and anything regarding the stock market, the financial world, and more specifically, Sofi. Today, guys, we've got a special video on Sofi, one of the stocks that we love discussing on this channel, and we're going to be answering one simple question. Can Sofi recover? Considering this is a stock that is down almost 30% on the monthly, why are we seeing the red that we're seeing right now, and when will we see a shift and possibly a reversal in the stock? But guys, before we get started, I want you guys to smash the like button so this video gets shared out to more investors, more Sofi investors, so they also get their answers question. And also, if you're watching this video on anything on the YouTube app, guys, there's going to be a button up there that says open app, go to app. I want you guys to press on that. It will take you directly to the YouTube app on your device. It will take you out of this weird template whether you're on Safari browser or Google Chrome, and it'll make the video a whole lot more pleasing to your eyes. So now that you've done that, let's get this video on Sofi and its future started. Okay, Sofi. All right, down almost 30%, well actually over 30% on the monthly, but only in the previous 5 trading days being down almost 20%. Where is Sofi headed? What is going on? And when will we see a reversal? Well guys, to understand what is happening to Sofi, you first need to understand what has happened to Sofi. All right, guys, we need to take a step back and kind of analyze what has happened. Okay, so Sofi was actually doing very well, right, guys, from mid-September. These are the lowest levels that Sofi has been on since mid-September. But why? Why did the stock market take such a big dip? And what is happening to Sofi? Well, guys, stocks go down because of one of 2 reasons. Number one is companies fail. Companies fail all the time. Companies have bad earnings. Companies dilute shares. Companies is insider trading. Companies go bankrupt. Stocks fall. Companies fail. Okay, so that's one way that a stock crashes and goes down. On the other hand, there's the market, right? The market. So the first one was the company, and the second is the market. Now, markets, on the other hand, markets fall as well. But statistically proven, 10 out of 10 times, markets recover. And when markets recover, they're followed up by a bull market. So they get bigger even, they get better, right? So that's why right now what is happening, guys, we are going through yet another bear market in the stock market because people are scared of a couple of things. A couple of things that are not related to Sofi at all, right, guys? Because after all, I mean, this is a software company, right? Sofi is a software company. It has nothing to do with COVID. I mean, who's getting it? Do you understand what I'm saying, right? I mean, it makes sense for Macy's to shut down and AMC stock to be down, and maybe even some travel airlines and etc. Maybe even some electric companies, right? If they have maybe chip shortages and etc. But Sofi, what is going on? So this is what's happening in the market right now, right? It's the COVID fears, right? Which were kind of answered by Joe Biden coming out and saying, look, guys, I have a plan, and the plan doesn't include a shutdown. So the stock market was like, all right, okay, good. But then on the other hand, people are worried of interest rates. Interest rates might be going up. And when interest rates go up, people don't have any money to spend, because basically how interest rates going up affects the market is that the bank needs to pay more money for borrowing money. Okay, when interest rates go up, the money that the bank borrows, also that interest goes up. So what does the bank do? Does the bank go like, oh no, I guess I'm losing money? Nope. It goes ahead and raise the interest rates on us consumers, everyday consumer. Hello, everyday consumer. How are you? Okay. So what happens is that those interest rates also go up. Mortgages go up, credit card rates go up, right? And when things go up, when prices go up, people don't have money to invest, right? And then the economy gets hurt by that. Okay, people don't have money to invest, and people don't have enough money to spend either. Okay, so will they have less money, right? And that hurts the economy. And people have this thinking for some reason, right? Which, I mean, if everybody thinks it, it's true, right? Because that's how the stock market works. If everybody decides that tomorrow a penny stock is worth $1 trillion and everybody decides to buy it, then that penny stock is worth $1 trillion. Okay, so it doesn't really matter my stance on it, but people believe that, look, the economy is the stock market, which I don't think it is. I don't think they're necessarily so correlated, okay? But look, the economy is the stock market. And if if interest rates are going to hurt the economy, they must be hurting the stock market. So what happens? People go ahead and sell. That's one reason why the stock market is down. Now, before we get to the second reason as to why the stock market is down and whether or not you should be buying this dip and whether or not this company can recover, I need to talk to you guys about something, and that is that we have now extended, that's right, extended the discounted version of the Money Talk Trade Alert program. That's right, guys, you asked for it, we gave it to you. Okay, last week, guys, we had a discounted version of our Trade Alert program, discounted from $30 down to $20, which comes with my trade alerts throughout the month with a 10% profits guaranteed, right, guys, and also a $200 a month lottery. So we had that deal, right? $20, but only 20 spots, and those 20 spots flew off the shelf. So I was like, okay, you know what, we need to run this back. So we've decided to extend the sale to the end of this month. Okay, and at the end of this month, guys, we're deleting the $20 version. So the $20 version has 20 spots, and right now 11 people have signed up already. So there's 9 spots remaining on the $20 version. And like I said, these are my trade alerts. They come with a 10% profits guaranteed every month on all closed positions, and also a $200 a month lottery, 1 out of 20 chances. 9 spots left. Get yours fast, guys. The link is in the comments, and also it comes with the exclusive Discord community, and you also get one-on-one access to the man himself, Money Talk. So if you have any questions regarding news, or if you have you want me to look into a stock, or maybe ask me some questions regarding your finances, etc., you get access to the man himself. Okay, so check that out, guys. The link is in the comments. First comment, you press on his button. Okay, so the next reason why the stock market is going down is because of these shorts. That's right, the shorty shorts. Okay, what am I talking about shorts? Well, it's important to understand, guys, the hedge funds, right? The hedge funds don't just sit around. The hedge funds are active traders. Okay, they're actively trading the market on uptrends and downtrends. Okay, when the stock market's going up, the hedge funds are like, buy, pump, send it to the moon. Right? And when the stock market's on a downtrend, when they feel a little change in sentiment, a little fear from the retail trader, they're like, yup, they're ready. Sell, short. And what does shorting do? Well, that causes the stock to go down, right, guys? Because the stock market is simple supply and demand. Okay? And when you buy something, when the demand is limited and you buy something, the price goes up. Okay? And then when you sell the thing that you bought, the price goes down. Okay. Now, what if I told you there was a way you could sell a stock without ever buying it, without ever helping that up pressure, and only hitting it in the head? Well, that's how shorting works, guys. Because when you short a stock, you borrow a stock from somebody, right? You borrow a stock from somebody, and then you sell it, and then you hope that it goes down in price, so then you can buy it back at a cheaper price and return it to the person that you lent it to. But you never buy the stock. You're just using somebody's already bought stock, and you sell. And what happens when you don't buy and sell? Well, you're only just hitting the stock in the head. And that's what these hedge funds do, right? When they sell, when they short. And that's how we get to the point that we're right now, right? Now, like I was saying, right, this is basically just a market doing what the market does, right? Market taking a dip and then market recovering in the future. So with that being said, last time that we were in such a situation, right, just to give you guys a timeline, last time that we were in a situation where people were very worried of interest rates was in 2018. And in 2018, it took approximately 4 months or so for the market to recover and for the market to start seeing gains again. Okay, so I would give this dip, I would say that we're going to see around these levels, maybe not the $15 level, maybe not such very low levels, okay, but I would be investing for, I would say, 4 to 6 month timeline. Okay, I wouldn't take the rent money due next week and put it into Sofi. Okay, but after all, these are just my opinions, and this is not financial advice. Okay, now what do I say that? Do I say that to dodge responsibility and not get sued? Absolutely, bro. Don't sue me. Okay. But also, I'm saying it so you guys understand that, look, one YouTuber and one YouTube video is not enough for you guys to invest your hard-earned money. Okay? Go do your own due diligence. Come on, you're smart, all right? You were smart enough to click on this video. That means you're smart enough to go type up something and do some Google research by yourself, okay? And whatever you do, do not read the Motley Fool, okay? Do not read the Motley Fool. Those guys are literally the most manipulative people, and all of their pieces are opinion pieces, basically. Okay, literally, no matter, they're all opinion pieces. Okay, so just do your own research, go through a company's books, go through a company's earnings. I'm very bullish on Sofi personally. Okay, but you should always do your own due diligence. So with that being said, guys, check that out. Check out the Trade Alert program. Make sure you guys subscribe for more Sofi updates. Happy investing. Buy this dip. Money Talk.